If you look at the financial headlines today, they will tell you a very specific story about silver. They will tell you that the price is volatile. They will tell you that high interest rates are bad for precious metals. They will tell you that the smart money has moved on to AI stocks and crypto. And if you look at the spot price on the COMEX in New York, the chart seems to agree with them. It looks weak. It looks suppressed. But this is the theater. This is the illusion designed to keep you looking at the puppet show while the real action happens backstage. Because while New York is busy selling paper contracts that claim to represent silver, something unprecedented is happening 7,000 miles away. In Shanghai, the price of silver is trading significantly higher than it is in New York and London. This is not a glitch. This is not a rounding error. This is what financiers call an arbitrage opportunity, but I call it the Great Siphon. Here is the mechanism. The Western banking cartel, entities like JP Morgan and the bullion banks in London, use the paper futures market to smash the price of silver down. They sell billions of ounces of paper silver that doesn't exist, flooding the market with fake supply to keep the dollar price low. In the past, this worked perfectly. It scared investors away, but today, China has figured out how to weaponize this manipulation against the West. When the COMEX smashes the price to $30 or $40, China doesn't panic. They say, "Thank you." They use the artificially low price created by Western banks to buy every single ounce of physical metal they can find. They're literally draining the vaults of London and New York. We are seeing massive shipments of 1,000-ounce industrial bars leaving the LBMA, London Bullion Market Association vaults, getting loaded onto ships and planes and heading straight into the vaults of the Shanghai Gold Exchange, SGE.
This is a wealth transfer of historic proportions. The West is voluntarily giving away its strategic reserves of the most critical industrial metal on Earth in exchange for its own devaluing paper currency. Think about the absurdity of this. The United States and Europe are fighting China with tariffs and trade wars, yet their financial systems are rigged to sell China the very resource needed to dominate the future of technology, energy, and military power at a discount. Why is this happening? Because the Western system is broken. It values the appearance of a strong dollar over the reality of physical assets. To keep the dollar looking strong, they must keep gold and silver looking weak. But the Chinese know the pattern. They know that eventually the paper game ends. They know that a paper contract on the COMEX is a promise you can break, but a physical bar of silver in a vault in Shanghai is power you can hold. We are witnessing the Great Divergence. For decades, New York set the price of silver, but now Shanghai is beginning to dictate the terms. The premium in Shanghai is acting like a giant vacuum cleaner, sucking the physical reality out of the West and leaving Western investors holding nothing but empty paper promises. The vaults are bleeding. The inventory at the COMEX is at multi-year lows, and yet the price on your screen hasn't exploded yet. Why? Because the transfer isn't finished. The architects of this system, the same institutions the media tells you to trust, are not stopping this flow. They are facilitating it. Just like British capital built American railroads in the 1800s before the pound collapsed, Western capital is now financing the rise of the East before the dollar dies. This is not a conspiracy theory. It is a logistical reality visible in the shipping manifests and vault audits. The West is being hollowed out. And in the next part, I am going to show you why this is happening right now and how this fits perfectly into the 300-year cycle of empire collapse that crushed the British pound and is now coming for the US dollar. To understand why the silver is leaving, you have to stop looking at the daily news and start looking at the timeline of empires. What we are witnessing isn't just a trade dispute or a supply chain issue. It is the textbook execution of stage 4 in the life cycle of a reserve currency. History is crystal clear on this. Every global superpower follows the exact same script. They rise, they dominate, they overspend, they print money to cover the debt, and finally, the smart money leaves before the collapse. Look at the British Empire. In the 1800s, the British pound was as good as gold. London was the financial center of the universe. But by the early 20th century, Britain was drowning in war debt. Their industry was declining. They started printing money to keep the illusion alive. And what did the financial elites of London do? Did they go down with the ship? Did they hold on to their pounds out of patriotism? No. Decades before the pound officially collapsed in 1931, British banking families began quietly moving their gold and their capital across the ocean to the rising power, the United States of America. They saw the writing on the wall. They knew the pound was dying, so they swapped their paper wealth for real assets in the new world. When the crash came, the public was left destitute, holding worthless currency, while the architects of the system were already safe in New York, wealthier than ever. Now, fast forward to 2025. The actors have changed, but the script remains identical. The United States is Britain. We are the declining empire, with 36 trillion in debt, printing money to fund wars and deficits. China is America. They are the rising industrial powerhouse, with the factories, the supply chains, and the raw materials. And J.P. Morgan, BlackRock, and the central banks, they are the modern-day aristocrats, moving their wealth to the lifeboats. This silver drain we talked about in Part 1 is the physical manifestation of this exit strategy. They're not selling silver to China because they are stupid. They are facilitating the transfer of real wealth, physical silver, out of the West, leaving Western pension funds and retail investors holding the bag of fake wealth, paper derivatives, and dollars. They know what is coming. They know that when the US dollar loses its reserve status, whether in 2026 or 2030, the only thing that will matter is what you physically hold. China isn't just buying silver to make solar panels. They are buying it to back a new financial order. They are trading their trade surplus, dollars they earned from selling us plastic junk, for our strategic assets, silver and gold. It is the greatest trade in history for them. They give us paper promises that we are debasing, and they take the finite resources that run the modern world. The arbitrage is the trap door. The low price on the COMEX is the mechanism that allows this transfer to happen cheaply. If the price of silver were allowed to rise to its true value of $100 or $200 today, this transfer would stop. It would be too expensive for China to drain the vaults. So the Western banks suppress the price to keep the exit door open for as long as possible. But here is the twist that makes this cycle different from the British collapse. When capital moved to America in 1900, it was moving to a nation of railroads and steel. Today, capital is moving to a nation of technology. And silver is not just money anymore, it is the unobtainium of the digital age. This brings us to the most terrifying part of the equation, the industrial vacuum. In the next part, I will explain why this isn't just a monetary transition, but a fight for the very survival of the technological future, and why the industrial demand for silver makes this the most explosive setup in financial history.
This brings us to the most critical difference between the collapse of the British pound in the 1930s and the collapse of the dollar today. When the British elites moved their wealth to America, they moved gold. Gold is a store of value. It sits in a vault and does nothing. But silver? Silver is different. Silver is the Achilles heel of the entire modern economy. China understands something that Western politicians have completely ignored. You cannot build the future with paper money. You can only build it with raw materials. We are entering the age of the industrial vacuum. Right now, the Western world is obsessed with net zero, green energy, and the digital revolution. Governments are mandating solar panels on every roof and electric vehicles in every garage. But here is the trap. None of that technology works without silver.
Silver is the most conductive element in the universe. It is irreplaceable. You cannot build a Tesla without it. You cannot build an iPhone without it. You cannot guide a Tomahawk missile without it. And most importantly, you cannot build a solar panel without it. The solar industry alone is now consuming nearly 30% of the world's silver supply every single year. And who manufactures over 80% of the world's solar panels? China. Do you see the picture forming? The West is pushing for a green revolution that requires massive amounts of silver. Meanwhile, the West is suppressing the price of silver on the paper markets, allowing China to buy it all up cheaply. We are literally subsidizing our own strategic defeat. We are handing them the bullets for the economic war.
This is why I call it a heist. It's not just about wealth, it's about control. By draining the COMEX and the London vaults, China is seizing control of the choke point of the 21st century economy. Imagine a scenario in 2026 where the relationship between the US and China completely breaks down. China doesn't need to fire a single shot. They simply declare an export ban on processed silver and silver-heavy technology. Overnight, the Western green energy transition stops. The EV factories in Detroit shut down. The price of electronics skyrockets. This is a strategic encirclement. While Wall Street traders are looking at 5-minute charts trying to make a quick buck on paper contracts, Beijing is looking at 50-year supply chains. They know that we have been running a supply deficit for 5 consecutive years. They know the mines are not producing enough. They know the above-ground stockpiles are evaporating. They are cornering the market, not like the Hunt brothers did in 1980 with leverage and paper, but with physical possession. The industrial vacuum is sucking the West dry. Every time the price dips on the COMEX, it's not a panic, it's a clearance sale for Chinese industry. They are taking the physical bars, melting them down, and putting them into products that they will sell back to us at 10 times the price. The window to get physical metal is closing because the industry must have it. A solar company cannot wait for the dip. They have to buy at any price or they go bankrupt. This creates a price floor that is about to become a launch pad. In the final part, we are going to look at what happens when the music stops. What happens when the vaults in New York finally admit they are empty? What does the force majeure look like for the average person? And how do you position yourself before the doors lock?
So how does this story end? We know the pattern. We know the motive. We know the destination of the wealth. But what does the final collapse look like for you? Most people imagine a Hollywood-style explosion where the price of silver goes vertical on the TV screen and everyone holding a paper contract gets rich overnight. That is not what will happen. That is the fairy tale. The reality is much darker. The end of this cycle will be marked by a phenomenon known as the decoupling. Right now, the paper price, what you see on the COMEX, and the physical price, what you pay for a real bar, are linked. But as the vaults in London and New York finally run dry, drained by the Chinese industrial vacuum we just discussed, that link will snap. The day is coming when you will log into your brokerage account and see silver trading at $50 or $60. You will feel rich. You will try to cash out. Or worse, you will try to take delivery of your metal. And that is when you will hit the wall. The screen will say, "Settlement in cash only." This is the force majeure trap. The fine print in the ETFs and futures contracts allows these institutions to simply pay you out in devaluing paper dollars if they don't have the metal. They will give you the fake paper price while the real physical silver is trading on the black market or in Shanghai for $200, $300, or $500 an ounce. You will be left holding a check that buys nothing while the physical metal sits safely in Beijing. This is the completion of Stage 4. The transfer is finalized. The West is left with the inflation, and the East is left with the assets. The Great Silver Heist isn't technically a theft because the West is selling it willingly. It is a suicide. We are selling our future for pennies because we are addicted to the illusion of a strong dollar. But you, the individual watching this, you have a choice that nations do not. You can exit the burning theater before the doors are locked. The pattern is screaming at you. The smart money has already moved. JP Morgan has moved. China has moved. They are not holding paper. They are holding the heavy, cold, industrial reality of physical silver. Don't wait for the news anchor to tell you the crisis has started. By then, the premiums will be 100% and the inventory will be 0. The only time to act is when the theater is still playing and the crowd is still asleep. This is not just an investment, it is a declaration of independence from a dying system. The cycle is closing, the vaults are draining, the shift is happening. History shows that paper currencies always return to their intrinsic value, 0. But silver is the element of truth. Get your wealth out of their digital illusions and into your own hands, because when the dust settles and the dollar dies, paper burns, silver remains.